What if Canada's biggest economic weakness was never oil itself, but where the oil could go? What if American refineries quietly benefited from discounted Canadian energy for decades while Canada lost tens of billions of dollars every single year? And now that Donald Trump's America is becoming more protectionist, more transactional, and more unpredictable, is Canada finally being forced to break free from that dependency? Before we begin, subscribe to Canada Now and hit the bell icon for deep analysis on Canada, energy, geopolitics, and the changing global economy. For more than 40 years, Canada's energy relationship with the United States looked stable on the surface. Alberta produced massive amounts of heavy crude oil. American refineries bought it. Pipelines flowed south. Everybody assumed the system worked. But underneath that relationship was a hidden economic reality that few ordinary Canadians ever saw. Canada was selling one of the world's most valuable resources at a discount, not because the oil was low quality, not because there was no demand, but because Canada had almost nowhere else to send it. And American refineries knew it. For decades, Canadian heavy crude known as Western Canada Select, or WCS, traded far below global market prices. Sometimes the discount was $10 per barrel, sometimes $20. In 2018, the gap exploded to nearly $46 per barrel. Think about that for a second. Every single barrel of Canadian oil flowing south during that period was being sold far below its potential world price. Not because of geology, not because of weak demand, because Canada lacked infrastructure. One buyer, one direction, one price. And that buyer was the United States. This is where the story becomes geopolitical, because today's Canada is not operating in the same world that existed 10 or 15 years ago. Donald Trump's return to aggressive tariff politics and America First economic pressure has fundamentally changed how countries think about dependence on the United States. Trump's approach has been clear: allies come second to American leverage. We've seen tariffs on steel, trade disputes with Europe, pressure on NATO allies, threats against Canadian industries, and constant economic uncertainty created through political negotiation tactics. For Canada, that uncertainty has triggered something much bigger than temporary frustration. It has triggered strategic recalculation. And suddenly, infrastructure projects that once looked like simple pipeline debates are now being viewed as instruments of national power. That is exactly why the Trans Mountain expansion changed everything. When the expanded pipeline officially opened in 2024, Canada gained something it had lacked for generations: direct large-scale access to Asian markets through the Pacific coast. And the numbers coming out now are historic. Canada recently exported 1 million metric tons of LNG to Asia in a single month, a national record. Trans Mountain is operating near capacity, moving close to 600,000 barrels per day westward. South Korean refiners, Japanese trading firms, and Chinese processors are buying Canadian energy at global prices linked to Brent crude, not discounted American benchmarks. That difference matters enormously, because oil sold to Asia earns more money than oil sold into the traditional American system. For decades, U.S. refineries benefited from Canada's lack of alternatives. Gulf Coast facilities were specifically engineered to process heavy crude from places like Alberta and Venezuela. These are multi-billion-dollar industrial systems that cannot easily switch to lighter shale oil. And for years, Canada effectively subsidized that advantage through discounted pricing. But now, the arithmetic is changing. As Canada gains more westbound export capacity, American refiners face a new reality: compete globally for Canadian oil or risk losing access to it. This is not political rhetoric. It is market leverage. And it arrives at a time when Trump's economic nationalism is already forcing Canada to rethink its long-term strategy. That is why Mark Carney's recent speeches about economic sovereignty, resilience, and diversification are so important. Carney understands global financial systems better than almost any modern political leader. He managed central banks through financial crises, Brexit instability, and pandemic-era economic shocks. And now his language increasingly reflects a world where trusted partnerships matter more than blind dependence. His message is becoming clearer every month. Canada can no longer afford to rely almost entirely on one customer, one route, and one political relationship, especially when that relationship is increasingly shaped by Trump's transactional worldview. And while many Canadians still see pipelines as purely environmental or provincial debates, globally these projects are now connected to trade security, geopolitical leverage, and economic independence. Asia understands this perfectly. Countries like South Korea and Japan are not buying Canadian oil and LNG out of charity. They are buying reliability. Look at the current world environment. Russia remains heavily sanctioned. Middle Eastern shipping routes face rising instability. Venezuela's production remains politically risky despite partial reopening. Global supply chains continue facing disruption after years of geopolitical tension. Canada, meanwhile, offers democratic stability, long-term contracts, and predictable supply. In today's fractured world economy, that reliability carries premium value. And here is the part that makes the next few years critical. The United States is not standing still. Washington has already shown interest in reopening portions of Venezuelan heavy crude imports. Why? Because American refineries still desperately need heavy oil feedstock. That creates urgency for Canada. If Canada fails to expand export infrastructure quickly enough, American refiners may replace part of their Canadian supply with Venezuelan crude. That could widen the WCS discount once again and reduce Canada's leverage. In other words, Canada's window is open, but not forever. And this is why the next pipeline debate may become one of the most important economic decisions in modern Canadian history. Because this is no longer just about Alberta. Every dollar gained from narrowing the WCS discount flows into government revenues, pension funds, corporate investment, public services, and national economic growth. The Canada Pension Plan Investment Board benefits. Provincial budgets benefit. Federal tax revenues benefit. Energy workers benefit. For decades, analysts estimate Canada may have lost $20 to $25 billion annually because of discounted pricing tied directly to infrastructure limitations. That number is staggering. And now Canada is finally beginning to reverse that equation. This is also why Trump's policies unintentionally accelerated Canada's strategic shift. His aggressive trade tactics may strengthen his political position domestically, but internationally they are pushing allies toward diversification, regional partnerships, and reduced dependence on American systems. Europe is doing it. Parts of Asia are doing it. And increasingly, Canada is doing it too. The irony is remarkable. For decades, Canada trusted that economic integration with America guaranteed long-term security. But Trump's version of America First forced Ottawa to ask a difficult question. What happens if the United States no longer behaves like a predictable partner? The answer now appears visible across Canada's energy strategy. Build more pipelines west. Expand LNG exports. Strengthen Indo-Pacific partnerships. Reduce pricing dependence on U.S. markets. Increase economic sovereignty. And prepare for a world where national resilience matters more than old assumptions. The biggest story here is not oil alone. It is that Canada is slowly transforming from a resource supplier trapped inside America's economic orbit into a country attempting to operate with far greater strategic independence. And if these trends continue, historians may eventually look back at Trump's pressure tactics as one of the major forces that pushed Canada to accelerate that transformation. Subscribe to Canada Now for more deep analysis on Canada, Trump, energy, trade wars, and the global power shifts shaping the future.